This is the Times Television Network, and you're watching ET Now.
Let's talk about global macros, currency, gold, silver, and other commodities with Jim Roger. He's author of Street Smart. Jim, morning. Thank you for joining us. Jim, let's first talk about gold, something which you track with a magnifying glass. Gold prices are down more than 5% in the month of May after that sell-off in the month of April. And silver prices, meanwhile, are topping the volatility chart, are down by 26% in the current year. How would you look at precious metals in past 2 months?
We've long been overdue for a correction in precious metals, which I've discussed with you and others many times. Gold was up 12 years in a row, which is extremely unusual for any asset. I know of no asset in history that's been up 12 years without a declining year. It may be something, I just don't know about. So gold was overdue for a correction. It only had one 30% correction in 12 years. You know, normally things correct 30 or 40% every year or two. So gold, the anomaly in gold was the price action for 12 years. Now, hopefully, we're having a long overdue and necessary correction. It could go on for a while longer. Then gold will make a new bottom, a sound bottom, after it scared a lot of people, and then the bull market will continue.
Jim, hi, morning. So while on paper gold has been getting sold, the physical buying has picked up from US to India now. Asian markets have paid premiums to acquire bullion in the past month. What do you read in the trend?
Well, that's not quite exactly true or correct, because you know, the gold ETFs have had big redemptions, and that's physical gold too. People have been getting out of physical gold. Yes, the shops claim to be packed, and some of them are, and you talk about a premium, but that's because the shopkeepers won't lower the price. The shopkeepers are stuck with high-priced gold, and they won't sell it. And fortunately for them, there are people who will come in and pay absurd premiums. But one does not have to pay those premiums to get gold these days, and one can find gold if one is diligent.
Jim, where do you see silver and gold prices trading by the end of the year? And would you advise the long-term investors that they should currently put money to work into gold and silver?
I'm not smart enough. You should watch ET Now. I suggest that's what you will find the answer. I'm a very bad market timer. I'm the world's worst short-term trader. I don't know where gold will be at the end of the year. You tell me what's going to happen in the world, and I could possibly tell you that. But I'm just sitting and watching. I'm not buying gold. I'm not selling any of my gold. If gold goes down low enough, I hope I'm smart enough to buy more, and silver as well.
Jim, so what do you think would be the impact of China in terms of commodities?
Whenever you have a slowdown for someone who's buying anything, whether it's soap or wheat or whatever it happens to be, certainly the prices are under pressure when buyers slow down. But that's normal, and certainly you have seen it in some commodity prices in the last year or two.
Jim, how would you look at crude prices, especially with high shale production in US and with OPEC and non-OPEC output expected to remain higher?
Well, we have slowdowns in demand, as we've discussed before, and whenever you have a slowdown in demand, that causes problems. And there is increased production in some places. Shale oil in the U.S. has been increasing, but most other oil fields are in decline, so it's somewhat of a balance. I would suspect that the surprise will be how high the price of oil stays and how high it eventually goes. If Spain suddenly goes bankrupt or there's some big surprise, of course, everything's going to go down. But if something like that happens, I urge you to buy all the oil you can, because known reserves of oil continue to decline.
Jim, the U.S. has expanded gas exports to Japan. What is your reading of this development? And do you think geopolitics is driving U.S. gas moves into Asia? If so, who all could be the beneficiaries, excluding Japan, and what could be the broader impact of such a move?
Well, anybody who gets cheap gas or cheaper gas than he was getting before, or than his competitors are getting, is going to be better off. Chemical companies, if anybody who uses power is going to be better off if they can get cheaper gas, as long as the cheaper gas lasts. Right now, natural gas prices in the U.S. are down a fair amount over the past 4 or 5 years, certainly compared to the Russians and what other people are selling their gas for. So if you can get some of that gas, I urge you to do it, but beware, because in my view, it's not going to last at most more than another 3 or 4 years.
Jim, the US dollar index is up by nearly 2.5% in the month of May. It has gained versus most Asian and emerging market currencies. What is your reaction to the latest US Fed comments, and how long do you think US Fed will follow this accommodative monetary policy?
Well, which Fed statements? You know, those bozos don't have a clue. One of them says this and one of them says that. So they don't really know what they're doing, and they're proving they don't know what they're doing. Mr. Bernanke, who's the head buffoon, has said that he is going to keep interest rates down until 2015 at least. Now, Mr. Bernanke also seems to be indicating he's going to leave when his term is up in 2014. I suspect he will leave because he doesn't want to be around when the problems really hit. What he's doing is madness. What all central banks are doing right now is most central banks is madness. And I'm sure Mr. Bernanke wants to get out before the problems really erupt next year and the year after. This is not going to be fun. This is not going to be fun.
Jim, but would you say the traditional value assets like real estate and gold are perhaps losing interest in the near term to more high-yielding assets?
Well, real estate where? If you mean real estate in Boston and financial centers in America, I would say yes. If you would say real estate in Hong Kong and some of the Chinese bubble cities, I would say yes. But Aisha, there are plenty of places where real estate is very cheap. You can buy agricultural land in Africa for nothing. You can buy agricultural land in many parts of Asia for nothing. So it depends on where when you say real estate.
Okay. Jim, base metals have had a rocky ride too. What kind of impact do you see of China having a impact on some of the commodity transactions? So do you think in the near term base metals as a category could be under pressure?
Well, what they're doing is they're putting a halt on commodities, using commodities as collateral and getting more loans. By the way, the Bank of India is doing the same thing right now. They've just cut back on using gold as collateral in the banking system in India. And that, by India, by the way, is the main reason that gold prices have been weak in the last several months, in my view. But anyway, India is doing the same thing that China is doing with some metals as well. And of course, if you reduce demand, you cause less buying and you cause prices to go down. But I would point out that things like nickel are now lower than the average cost of production. Some of the lead mines, in fact, most of the lead mines in the U.S. have to close at the end of this calendar year. So there are things going on in the base metals markets which are cause for optimism.
Agricultural commodities have not been able to sustain at high levels. Coffee, corn, soybean, rice, all of them have declined from the highs they made earlier this year. How should one approach agri-commodity as a group now?
Well, I am more optimistic about agriculture than most other things. Inventories of agricultural products are near historic lows. Maybe we'll have great crops everywhere this year, and they will stay down. But again, inventories are near historic lows. We're running out of farmers. The average age of farmers is getting very old throughout the world. So I am still extremely optimistic about agriculture on a secular picture. I mean, things like sugar are down an enormous amount over the last few decades.
Jim, even as markets stumbled on Fed stimulus uncertainty, the stimulus support from other central banks like UK, Australia, China, Japan is still high. How does that work for global economy and for various asset classes?
Well, as you know, there's trillions of dollars being printed and pumped into the market. Aisha, you give me $1 trillion, I'll show you a very good time anytime you want. Give me $1 trillion. And the people who are receiving all of this money are having a very good time right now. Unfortunately, it's artificial and it's going to come to an end. I don't know when. And when it comes to an end, all of us are going to have to pay the price and even the ones who are having a good time right now with the artificial stimulus are going to have problems too.
What about global equities then? Because they've been rather seeing a strong run-up in the month of May before consolidating or even correcting a bit in the last few sessions. Would you rather favor this asset class versus commodities?
Well, I don't really want to own equities right now. I owned a fair amount of Japanese equities, as you may remember. I sold most of them 2 weeks ago. I thought I was selling them badly. It looks like I might have got something right for a change. But I'm not very optimistic about equities because you see what happened in Japan when people start getting worried about the end of the artificiality. Aisha, when everybody realizes that all the central banks are going to have to cut back, it's not going to be fun. I mean, the Japanese stock market has collapsed in 3 days. You just wait till the whole world has to face this problem.
Well, good old Jim Rogers, appreciate your time and thank you for your insights.
This is the Times Television Network, and you're watching ET Now.